Okay, so how's everybody doing? We've got an interesting, short, brief, I would say, not overly in-depth and certainly not comprehensive webinar on the meaning of the meaning of the advent of the Bitcoin futures market in terms of what sort of opportunity it might be for traders who are futures traders, but also what sort of implications it should have for the cryptocurrency market space in general. But one disclaimer right off the bat, as I said yesterday, if you aren't familiar with futures at all, some of what we cover today may be relatively difficult to appreciate. So this is going to be recorded, so you can listen to this later if there's things you didn't understand, and maybe either watch my Introduction to Futures webinar or something that's similar that just gives you a basic background so you understand what really is implied by a futures market in terms of its moving parts. But really the point today is to look at why this is coming into being, why we're looking at creating Bitcoin futures markets and how it can be utilized and what its implications are, as I said. So real quick, where we stand now, the CBOE contract opened just a few days ago on Sunday. They did it by completely wide open auction on at 4 p.m. and opened the futures market, I think, a couple hours later. And I think that this was somewhat of a mistake for reasons I'll get into in a minute. The CME contract is going to start trading this Sunday, and I would imagine it will over time become the more important contract. And they're doing it by an index basis for settling. Now, the reason why I think the CME contract's probably going to be the more important one is just a simple network effect idea. The CME is far more established, and traders have to pay for data. And I think that there's a lot of futures traders out there who pay for CME data who do not pay for CBOE data. If you're really a futures trader, there's very few offerings on CBOE, and there's most everything that comprise the list of the most popular futures markets are already on CME. And traders tend to flock to liquidity. And my guess is when you see CME open, the liquidity is generally going to be higher. And I think over time this is going to become a winner-take-all game. So I think people will just end up focusing more on the CME contract. As far as the expirations calendar, they're leaving it open right now, and that's probably smart. It's starting off with a model that will be either on the March quarterly sequence like equity futures or serial like commodities like crude oil or natural gas with every month. They're going to kind of let it work itself out because, frankly, you don't know what the economic needs are of the major participants. And there are some, like the Bitcoin miners, who have a principal cost of electricity, and there's events in the electricity markets, and they need to figure out how they're going to organize their hedges. So market participants will tend to bolster the liquidity of the contracts that the exchange will end up probably reinforcing as the cycle. And I think that they're just doing a wait and see, which is probably, again, the smart thing to do. It looks like CBOE's got a $10 tick spread. CME's got a $5 tick spread, and there's more inherent leverage on the CME. And that's probably another reason why the CME is going to win out because of something I'm just about to discuss. And that is that the brokers are being extremely cautious about the way they deal with this. So, and the NASDAQ is supposedly going to be putting out a contract in the first quarter of next year, but I bet you that's up for grabs and maybe won't happen. And I guess it just depends on how much of a marketing win it is to be doing this in the first place. And that kind of gets to this next point, which is this market is not being created for you to use. It's being created for brokers to gain accounts. Cryptocurrencies are super popular right now, and they were feeling left out. And so they're not taking any risk. And I think one of the things to think about here is you can imagine a multi-billion-dollar company like an Interactive Brokers, and they want to take advantage of all this fervor and this excitement about Bitcoin. And they get around a table with, a few economists, some finance professionals, their Citigroup reps, and they start to hash out what the risks are going to be and how to control for them. And this is probably the only market in the world where you've got people sitting around that table who are experienced in financial markets who honestly don't know whether or not this is going to be at 100,000 or zero tomorrow. Right? There's very, very little faith in the conventional financial community about the pricing of Bitcoin over time. And because of that, they're really just tiptoeing in, because you need to understand what these brokers are really trying to avoid is massive negative account balances. And that can happen if it's a fast-moving illiquid market and you've got lots of inexperienced traders with small accounts that are levering up, let's say, short. And they have to be forced closed as it goes through 30 or 40,000, and that, in an illiquid market, it spikes it up to 60,000, and they've got suddenly, the clearinghouse and the broker are left with billions of dollars to reconcile that's never going to be paid back to them. So that's the main thing that they're guarding against. And they know the furthest down it can go is to zero. So I think what they've essentially done is they've structured no leverage into this, and they've really limited shorting so that they know that people's accounts will be wiped out if it goes to practically nothing in a giant crash, but the broker won't be left with a huge bill. And they're removing the short side for now to let things play out, because it could conceivably go to infinity, right? There's no limit to the upside. So I think they're probably going to behave that way for a while. And one of the other factors that I think is going to be really important in this is, so you've got this tentativeness in terms of allowing people to really participate in this market in a free-flowing manner because of the risk inherent in that if there's dramatic or extreme price movements. However, what that can lead to is a failure of the ARB function of the market. So you will end up with a futures price that could stray dramatically from the Bitcoin price if people can't short just as much as they buy and take significant leverage so they can take advantage of that difference. We know at the end of the day, at the end of the month, at the end of the quarter, the price is going to be reconciled with Bitcoin, because that's the definition of that market. But in the meantime, there could be wild kind of straying movements if you don't allow people to arbitrage. And one of the most important parts of that is prime broker services. And we're going to talk about this in a second, but right now all indications are that Wall Street and the sort of traditional establishment, the financial establishment, probably doesn't want to support the legitimacy of Bitcoin in any way, and they're staying out of it. So that means there's very few options for bigger money funds right now to establish prime broker services and play in a significant way, particularly in terms of arbitrage functions, because you'd have to be able to buy Bitcoin, short Bitcoin futures, and play it back toward the middle, which is ultimately what keeps this market functioning. So I think over time we're going to see that, but initially what we're seeing is an extraordinarily slow and tentative process by the brokers as they let things work out. So my guess is, if I'm looking at this as a trader and I trade futures, I'm thinking of trading this market, I'm probably thinking I'm not going to be doing much in this market for a few months. And that's just probably the way it is. And, you need to be just kind of honest with yourself about what the opportunity there is. Either way, the ARB function will be important to establish. That will thicken out the market, and that will allow the smaller retail brokers to become more adventurous in terms of the leverage they let you get and the degree to which they allow you to short. Okay. Now, these are going to be cash-settled futures. You do not end up with a bunch of Bitcoins being delivered to you on expiry if you hold to expirations. And that's really important because there's a lot of people out there that aren't allowed to trade Bitcoin, but they are allowed to trade cash. And that allows most of Wall Street to end up speculating on the price of Bitcoin because it becomes a true side bet. So if we get the prime broker services from some non-traditional players, we thicken out the market, the ARB funds come in, the hedge funds come in, and the retail brokers get more adventurous in terms of allowing leverage and allowing shorting, then it's going to become a really popular trading market for a time because there's not as many dominant algorithmic players. There's wild volatility, and everybody's going to be able to participate because it's cash settled. And the other big player that's going to be brought into this game is the Bitcoin miners, and we're going to talk a little bit more about that. But we're going to have to wait and see how they end up handling this because traditionally, you've got a big fixed cost investment and a variable cost investment through time with any kind of, this is essentially analogous to something like an oil driller or a gold miner. And you, generally speaking, will get regular hedging activity, and the miners will hold different levels of hedging depending on their margins. And we really don't know what the shape of that game is going to look like, but that's probably going to be one of the most dominant defining forces in this market. So now one other thing I want to spend a second on is understand that there is a conventional financial establishment in our society, and they are not going to be working over the next decade or two to gradually increase the legitimacy of Bitcoin, which for perfectly understandable reasons. That's not a conspiracy theory. I mean, that's just basic economics. It's in theory, it's something that could, if extrapolated to its extreme, disintermediate the banking system. Imagine if everybody could get paid in Bitcoins in income. The IRS would be, in an impossible situation. So, of course, they're not going to support the legitimacy of it. But that means along the way in these nascent steps, it's going to be a headwind for this market to thicken itself out. And one example is, the lack of a JP Morgan prime broker allowing major positions in Bitcoin futures. So that's just as an aside. Now, the main thing that I think, now we get to the part where I think this is the most significant implication of this market coming into existence, and that is that over time, it will allow for the establishment of, I think, what people want to do right now, who are managing significant amounts of money and who look at sort of the smart money in the institutional universe. What they're looking at this situation as is the ability to find interesting altcoins, $10 million, $20 million, $30 million market cap that have real promise. And the main thing that they're worried about in doing that is this. I think that the conventional finance community, unquestionably right now, this is our sentiment read as we start this process, unquestionably the dominant view is that Bitcoin is widely seen as a bubble by the conventional financial community. These are headlines just from the last couple days. I could have gone back 2 weeks and I would have found the same headlines. Like everywhere you look, it's the biggest bubble ever. It's the most perfect bubble ever. It's the bubble to end all bubbles. This is the main view of the financial community and the financial media. Is Bitcoin is the biggest bubble of all time, and so that implies the assumption that whatever you're going to do here, you're going to do in a way that will avoid maximum pain when the inevitable crash finally happens, because that's the very definition, the understanding of something as a bubble is it's synonymous with saying something that's going to crash soon, right? And you have trouble speculating on these altcoins if you believe that Bitcoin is going to crash at some point. So what the Bitcoin futures market really does is it allows for the formation of cryptocurrency-centric hedge funds who will short the Bitcoin futures and speculate long on interesting altcoin opportunities. They remove the Bitcoin crash risk and still allow themselves to gain exposure to what they think are genuinely interesting and powerful innovations. Because as ChartTrader will be the first to tell you, there are there's a ton of coins out there. Some of them are CryptoKitties, okay? Some of them are Tulip coin, but some of them are genuinely interesting innovations that allow interesting things to be done with contracts and commerce, and that could go from being, a $10 or $20 million market cap to being a $10 billion market cap in a year. And there's very few places on planet Earth where you can find the potential for that kind of return. And that's what hedge funds are in the business of doing, is finding low-risk opportunities with some percentage chance of very high return. And the ability to short the Bitcoin futures market is the principal way that people are going to see that as a possibility. And I talked with ChartTrader quite a bit about this a couple weeks ago, and he's already seen some of this coming into play as a front running of this possibility. And he's been making money, I think you've seen, hand over fist, as he's kind of speculated in some of these smaller altcoins that are doubling and tripling before his eyes. So I think that that's front running formation of hedge funds. I think there's something like $8 billion right now out there in funds, and maybe we see 10, 15 times that by a year or two from now. And the prime broker services will be a part of that, but there are some, as I said, some smaller tier players that are allowing prime broker services to come into play. So we have the widespread fear of a crash, and that's going to shape this sort of strategy landscape for the bigger money coming in, which means what? It means probably a lot of commercial hedger short position. If you think in terms of like the CFTC report, commercial hedger shorts and probably producer shorts. And so what does that leave? That leaves speculative longs. That leaves all the retail traders out there that weren't comfortable trading in spot Bitcoin, who now suddenly have access to a futures market to speculate on the next leg higher in the bubble. That leaves trend-following quantitative funds, et cetera. So I think that's going to be kind of the landscape that forms. And then there's the ARB funds. And that's going to kind of depend upon when that ARB opportunity becomes big enough to overwhelm fear of the risks. So bigger picture, I think what to expect, what's implied by the advent of a Bitcoin futures market that actually gradually gets traction and takes hold, should dampen volatility in Bitcoin. Always does. The addition of a futures market always dampens volatility. It should, because of this opportunity that I've just been discussing, it should reduce the correlation among the crypto space, particularly on highly volatile days. I know there's a lot of diffusion charts you can see where the correlation's not actually that high when the market's not doing anything too crazy. But when it does its crazy moves, when Bitcoin makes a big move one way or the other, the correlation seems to go up very much, right? And so that's what should reduce itself. We should gradually gain a situation where people don't panic out of the smaller altcoins because Bitcoin's having a bad day, because they'll have hedges. Okay, and then a bunch of new crypto hedge funds. I said I think there's about $8 billion right now in that space. I think that you probably get 10 times that. And I think probably as that starts to take shape, it only makes sense that some of the more traditional sell-side firms are probably going to be hiring crypto altcoin analysts. You know, that's going to become a business. That's going to become something people want. That's going to become something you can sell. If you can do the research and you can sell the report. And I think that I really wonder about this second to last one, because the SEC has already taken a stand and said, you know, they don't want a Bitcoin ETF because Bitcoin's an unregulated market. There's nobody at the end of the day that takes responsibility for improper movement or improper executions or whatever. So this is a side bet, right? So this is a cash market. So it's possible that the SEC might see like a route around that rule and end up allowing for ETFs that hold futures contracts. So I think that that's just possible, that we'll start to see. You won't need to trade the futures because eventually you'll be able to trade the futures holding Bitcoin ETF. And then you'll have to worry about the forward curve and contango and all that good stuff. But yeah, I really don't know what that's going to look like at this point. And then the last point, more regulation. There's a lot of futures markets that actually end up being bigger than the cash markets or the spot markets. So you get kind of a tail wagging the dog feature. And it's possible that that will eventually happen with this, which will allow CFTC and SEC move on this market to actually regulate the Bitcoin market. Because if there's more money going in and out of the futures market than in the spot market, then regulating the futures market will have an impact on the behavior of the whole market. I don't know whether that's going to happen, but it's a possibility. And so that's it. So if you have any questions, I'll definitely take them off the air. First, let me show you, in case you don't know. This is how you can contact me, bmanning@briefing.com, or you can email to briefingtrader@briefing.com, or you can use that Talk to Us feature and send me questions. If you have any questions, otherwise, you know, you can write them in now, and I'll do the best I can. The brokers, well, so, okay, so here's a question. Wouldn't the brokers be washed out in a giant sell-off as well? And so here comes the question of where they set margin levels, right? So I don't know if you guys were trading futures back in 2011 when silver went to $50. But what eventually cracked it and knocked it down for 12% in a day is when they started to raise the margin levels, because the volatility on a percentage basis per day was starting to really get out of hand. And they had to increase the margin levels because they were worried about being left holding the bag on a sell-off. So where they raised the margin levels to was something where even in a massive crash, a smaller trader wouldn't be able to afford more than about a contract, if even, which protects them. So they're already setting margin levels at really, really expensive levels for this. I would imagine the calculus behind where they have margin levels now is basically like they won't be hurt even on a 50% drop in that market. And if it drops 50%, they'll probably raise margin levels more. So the brokers will keep from being washed out by setting a level based on the price where they take a look at what is even a 2 standard, 3 standard, 4 standard deviation move in that market on the downside and setting the cost of margin at a level where they'll be okay. I imagine that's exactly where the current margins came from. Oh, there's a lot of questions here. This is a really interesting topic to people. I don't know about Bitcoin options. It only makes sense over time. There's several questions on that. So here's a good, I think, very material question. At what point in time will investors be able to short? So here's how they're doing this right now. They know that's what people want, which tells you something about sentiment. And so they're coming up with ways to kind of market it as if you can short. And the closest I think that's happened at this point is Interactive Brokers is saying you can do a calendar spread short, where you are short a March expiration, but you have to be long the same amount in April or June. So you have to be paired up so you're actually net flat, but your sooner expiration is the short expiration. So if you did nothing, you'd be long the market. And that's the other way they're protecting themselves. I would imagine, as I said before, that I think probably it's when there's enough of a prime brokerage move to allow for arbitraging of the market, and we build out levels of liquidity so that it doesn't, it's just time probably, where they just start to become comfortable with the idea that there's enough meat on the bone here that it's going to behave in ways that are relatively inside of what normal expectations are for human beings involved in a market. And right now, it's not behaving that way. I think anybody can look at that chart and say this is not typically what we see in markets. So it needs to normalize in some level, and I don't think there's an exact time for that. It's going to be interesting to see, but it's certainly not right now. There's a lot of questions that basically have to do with Bitcoin itself rather than Bitcoin futures, and I don't want to go out on a limb there too much in the context of this webinar. I think, so the question of whether or not it's a bubble right now, I'll at least take a second on that. If it's a bubble, it's a really odd bubble because I constantly go back to the question of usually a bubble is about something like carrying capacity. I don't know if you remember your biology lab when you were in freshman in college and you had like a little beaker of like cornstarch, and you have these little mealworms or something, and they reproduce over the course of like a month until they get to be too many for the carrying capacity, and they start to die off, and you track the population, and it goes up, and then it crashes, because at a certain point, there's too many beetles in that cornstarch to allow for it to, or cornmeal or whatever, to allow for it to carry that population, and when the population starts on the other side of it, it's a true crash, right? And I don't know about you, but I still don't know anybody personally who has any exposure to Bitcoin. I have no exposure to Bitcoin. There's none of my friends, none of my relatives, none of my people I talk with trading except for ChartTrader. And I'm sure that in those communities, ChartTrader probably knows lots of people who do. But it's a niche thing still. It's not made a wide mainstream move. However, the concept of gradual acceptance and utility as a currency is very different from its price as a market. And right now, to the extent that one might say it's a bubble, it's sort of a bubble because its movement in price has nothing to do with its utility as a currency. It's more like a rare stamp. It's like a collectible market. I mean, it's infinitely divisible. It could be, we could have an exchange rate and it could be widespread, used as a currency and be at a lower price than it is now. Not everybody has to own a Bitcoin. You can own tiny fractions of a Bitcoin, Bitcoin bits. So it doesn't have to increase in value just because it's being used as a currency. It's increasing value because it's rare and interesting, and there's a lot of momentum in that trend, and I have no idea how far it's going to go. But just from the standpoint of, hey, is everybody overly bullish, and do too many people own it? Both of those questions are definitely no. Everybody's looking for the crash, and nobody owns it. So it's weird. I don't really know what to say beyond that, but I'm not going to barrel in shorting naked and scaling up. So look, I'm going to go through and I'm going to look at all these questions, and I'm going to get back to you guys. I don't want to spend too much time just sitting here ranting, but I will address these questions, and I'll get back to you over email. It keeps a log of all these questions, so I'm going to do it that way. And I'm going to go ahead and break off this at this point. And again, it will be available if you want to listen to it again. We're going to archive it probably tonight, and it'll be up on the Briefing TV YouTube channel tomorrow. So thank you very much. And we'll probably do something like this again pretty soon because obviously there's a tremendous amount of interest. So, okay, thanks a lot, guys.